What's going on, Fud Nation? Welcome back. Today we have a very exciting episode for you. That's right, we return and have a follow-up conversation with none other than Mike McGlone, the senior commodities and precious metals analyst over at Bloomberg HQ. He comes in to tell us the one very specific thing that he believes will create a bull run in Bitcoin and cryptocurrency. One thing, and it's waiting for you guys. Get ready, strap in. We have another phenomenal installment of what I hope to be a regularly recurring segment with Mike McGlone over at Bloomberg HQ. I hope you guys enjoy this chat we have, and I'm so flattered that he wants to keep coming back on FUD TV. Here we go again, Volume 2 with Mike McGlone from Bloomberg. Welcome back to the show, Mike McGlone over there at Bloomberg HQ. Thank you so much for coming back on the show. So excited to catch up what has become the most watched ever FUD TV segment is our original interview from about 6 weeks ago with Mike McGlone. It's a very interesting segment. Full disclosure, quite bearish, but at the same time, I really am interested in getting outside this cryptocurrency echo chamber and really looking towards as many experts and people that can bring some perspective to this whole experience, the movements of the markets that we're experiencing. And I think Mike is a phenomenal resource. So thanks again for coming back on the show. How are you doing?
I'm good. Thanks for having me. I just think of since the last time we spoke and all the interviews you've had, I've learned a lot from FUD TV, and I much appreciate that.
Thank you so much for the kind words, Mike. And so I guess without further ado, let's dive in. Mike infamously predicted a $1,500 Bitcoin as long as November of 2017. Is that correct? Am I remembering that right?
Yeah, it was when we started having the axe to grind that. Everybody knew it was a bubble. It's just a question of picking the peak, and we got lucky enough to pick the peak within a week, which I think we mentioned last time. Now it's kind of a curse in a good way. It's like, okay, what are we doing next? And that's basically all the focus. What do we do next? Now, I really like to open the macro, which I think we'll go there. Macro, what's going on with the dollar? If we're going to call these currencies, we have to really compare to currencies. And to me, that's what I'd like to go to a little bit today, as we discussed earlier. So to me, that's quite important to mention, because this is probably a key year to watch the dollar.
That's a great point, and I think that's where let's just dive into that first, because there's plenty of content coming out trying to predict the price of Bitcoin, but let's make some macro connections here and really dive into your expertise, because you're an analyst. Actually, just quickly, could we just, if people didn't see the last segment, could we talk a little bit about your background, how long you've been analyzing commodities and precious metals, and how what position you hold over there at Bloomberg, just so that people can understand a little bit about your expertise and where you draw on to make the statements and the claims that you're making.
Okay, you probably learned a lot less. I'm not a fan of big bios. So I'm a senior cryptocurrency and commodity strategist at Bloomberg. I basically started in the trading pits in Chicago in the 80s. I've been in New York since 93. And I've been at Bloomberg it'll be 2 years in June. And I like to say it only took me 25 years to find the right job. So pretty happy here at Bloomberg. And the cool thing I love about what I do is I've got a lot of the trading experience in a good way and a bad way. Didn't feel like a convert. I don't trade hard at all anymore. I just like to say it and show it. And that's a key thing we do here at Bloomberg Intelligence. Is my primary goal is to try to get the markets right, get it in the terminal, get it out there without a bias. And so there you have it. We have, just trying to get the markets right.
Oh, awesome, and I appreciate that. So, not too shabby, 30 years of experience here to draw on, and I appreciate you taking the time to enlighten the FUD TV audience here. So let's start with something that's in your wheelhouse here. What's going on with traditional markets right now? There's been a lot of chatter about a tremendous plummet coming in the stock markets, potentially, the baton being passed to precious metals as far as a bullish sentiment. What do you see as far as macro trends going on, outside of cryptocurrency?
That, to me, everything trickles down from increasing stock market volatility. And it just got started last year. Crypto's declining was part of that, similar to the housing market declining back in 2000, and basically started in 2006 and then declined into the crash. To me, it's all linked, but it starts with the stock market picking up. In fact, if you look at the VIX, Volatility Index for the stock market, 2017 was the lowest annual average ever. So its risk is it mean reverts higher. So that's got started. I think it's going to continue. Cryptos are part of that. And so that's what I'll show you in a little while, a chart that overlays the stock market with Bitcoin, VIX with Bitcoin, VIX's volatility. And I think it's all linked. The key thing to watch this year is if this happens the way I think it's going to happen, where we have continued U.S. stock market weakness and the Federal Reserve tightening out of the picture, it means a weak dollar. And if we have a weak dollar, a weakening dollar, that should really kick in. And I really think it's going to start mattering for Bitcoin. Now, remember, I'm still bearish, but I really believe in Bitcoin as digital gold compared to all other cryptocurrencies. And I'm hoping I'll be able to, by the end of this year, be able to bring that out in some analysis where it's bottoming because the currencies, the broad dollars declining, and gold would be appreciating too. Now, gold's already kind of started that. I'm still favorable to gold, but it just hasn't done anything for 2 years, and Bitcoin's gone up a lot the last 2 years.
Yeah, I think that's great, and I really appreciate it. I want to sort of highlight for everybody, having bearish predictions based on quantitative analysis doesn't mean you're anti-Bitcoin. Mike here is expressed to me both on and off stream multiple times that he does believe in the future of Bitcoin, and just the quantitative models he's using are producing bearish short-term, medium-term predictions, but that doesn't mean that there's an overall bearishness on the Bitcoin asset. And so I just want to highlight that as we go through this interview, the point is not to diss Bitcoin, the point is not to shade the cryptocurrency industry, but this is just about using some very what I think are analyses that I don't get to see very often in the industry, and really benefiting all of us because of Mike's expertise. So let's dive in right here, and you can take it away.
How about if I share my screen with you, if that's okay? I think you can see that.
Very much okay.
See that. Now we're sharing it officially. So basically, you should be able to see my main dashboard and look at cryptocurrencies. What I published last, I'm just going to dig into a few charts. I want to start out with the macro one we mentioned. This is a chart. As soon as it comes up, you should be able to see it in the orange line. That's Bitcoin. I'm sorry, that's the VIX. Inverse. Okay. It's a 250-day average of the VIX and inverse. In white, we have Bitcoin. Now, you can see there's very similar patterns in trading. Wow. Remember, this is a 250-day average, so it's somewhat delayed. But what happened recently was the VIX, this low here on the right, in this case, it's inverted. It's inverse. Was the lowest ever. So that goes back 30 years. That's pretty significant. One thing to remember in volatility is always mean reverting. So it started to turn back. The VIX is trending higher. In this case, it looked lower, but you can see Bitcoin's doing the same. I'm looking for the VIX to get to its mean historically, which is around 19 or so percent. If you look at Bitcoin, similar, they're same. Getting close to that mean, which is around 1,500. That, to me, is the big picture macro. I'd like to show you another one similar that makes it a little more simplistic. This is a simpler chart we did. It's overlaying the similar price trends in Bitcoin and the S&P 500. Now, they're not correlated if you measure most measures weekly, monthly, annually. But if you look at the charts, they look the same. I mean, they're very similar.
Wow.
In Bitcoin, we have white in Bitcoin, and I'm pretty sure I've got log normal. This is a monthly. I have the S&P 500 in orange. Now, we're looking for it to go back to the 48-month mean. It's already done that. Bitcoin just bounced off of it on the far right, but it's still a bit of a problem. Typically, it has bottomed at its historic mean, which is still around 1,500. So I just want to show the two together to bring in the macro. I think that's important. This is, if there's going to be one chart, if I could only show you one chart today, when I'll show you some more, that leads me to believe I want to dig in further and expect for Bitcoin to go lower. This is it. Now, it's a bit complicated, but first I'll show you on the far right in this like aqua color, that's the NVT ratio, network value to transactions ratio. Now, you can see the good news is it's heading down. It just got way too high. Like the PE ratio. Now, I think we showed this last time. Yep. Last time at bottom was right around where this is. I think I'm using a 10-week average. It bottomed right around where Bitcoin took off in October 2015. The significance is it's still way too high, and it's got to go much lower. If you use, you have to extrapolate in the future. Past performance is never indicative of future returns. I expect it to go lower and stay there for a while. But overlaid with this is volatility. The reason I use volatility is because typically when volatility bottoms, this is Bitcoin 180-day, and I really use 180-day because I just beta test all different measures. Mm-hmm. Last time volatility got to an all-time new low in this measure was, again, October 2015. That basically marked the beginning of this rally, the way I see it. It just, market broke out. And then that was the buy signal. It broke above the 52-week moving average, all that. Volatility is still way too high. It's got to get to a new low, in my opinion. And what we're doing now is a good way to do that. Problem is when it breaks out too early, that's usually an indication that it's just speculative excesses. And what I see here is the market's getting rid of speculative excesses. But what I want to show you is typically I'll look at a weekly, I'll find a moving average that fits. I stay away from dailies. They'll just make you lose your hair.
Mm-hmm.
You see, I used to do a lot of that. And I'll find out what gets oversold. So you look at a weekly chart. I take a spread from that. Here's 60%. That was the bottom, 2015. We reached that. The market got significantly oversold. Acknowledged, but it's only done a minor bounce. It probably is going to do this, but trending lower is what I think. But every day is a different day. We'll see what's happening. So that to me is really more the shorter term. I want to show you a few other things that are still kind of keeping me on my toes a little bit about.
So you're moving very, very rapidly, and I think you're saying so much stuff that's of value here, and that's why I don't. Before you move on right here, I just want to recap here that you have identified two different all-time lows in the volatility, as well as sorry, what is the aqua line again? NVT.
So I think it is aqua. That's the NVT ratio.
Okay.
It's heading lower, but it's still nowhere near the previous lows, which probably should go lower than the last one.
So something to consider is, if you're looking for other indicators that can help you gauge what is high or low or middle for, but helping understand what a good price for Bitcoin is, or what oversold or overbought is, besides just using RSI. These are some indicators that I don't see being talked about very often, and I think if you can see here, they've proven that they've marked bottoms in the past, specifically to the 2014-15 bear market, which is of course a great comparable to what we're experiencing now. So with that, I just want to pass it back over to you, Mike. Go ahead.
Yeah, well, thanks for the reminder. I should slow down and pass it back to you more frequently. So, yeah, that's the key thing. I have a few other indicators I can show you, and I will. This is just some of the last few things I published. I wanted to show you one simple chart, and simplicity, as a strategist, as someone's trying to pick up, I want to see something that's going to show a change in patterns. So I have a simplistic chart of the bear market. Current bear market, and I found what's a moving average that works, and in this case I think I'm using, what am I using, the 40-week, the 12-week, I think it's 18. I have to double check, but and I'll just take a band from that. So the market got extremely oversold here, extremely oversold here, overbought. And I don't like to use this kind of stuff too much because I see a lot of other people do, but I don't see any change yet in this pattern. This rally has been 33%. That's nothing. This one here was 100%. This one I think was around 50. Now this one was 100%. So there's no change yet in the pattern to make me not think it's going to continue lower.
I guess the old adage of lower highs and lower lows is continuing to prove out right now. And yeah, just like you said, we've had, from a percentage standpoint, much more significant bounces in February and again in April or May. And so yeah, I think you're absolutely bang on the money that there's just been no, I guess, evidence of a trend reversal at this point.
Yeah, and there's fundamental things, news that might come up. People keep speaking about things like back and stuff like that. Not stuff I can't predict, but hopefully that'll show up, and hopefully I'll have something to grasp on. And another thing that's been really, I'll stick with, I'm always looking for new indicators, but one thing we've been using a lot is addresses used, partly because it was consistently kept us pretty bearish last year, and consistently was very bullish during most of the long run. And if you use the addresses used, Bitcoin addresses used, in this case I'm using the 30-day average, they're currently averaging right about the same level when Bitcoin was last around 800. That's not good. The good news is it's kind of holding a support level, but it's still not a good indication. Now, there's so many different, every indicator has flaws. And one of the things that people say is, well, people might be just using Bitcoin as gold, which I think they're going to eventually just hold it and put it aside. I mean, why use it to transact when you have better ways of doing that? But it's just an indication that has been working.
Well, I found that very interesting as well. Yeah, and obviously there's debates as to whether Bitcoin is a medium of exchange, a currency, or digital gold, sort of just a store of value. And I guess that debate is going to continue to rage and continue. Certainly not a debate that has been closed off or conclusively decided yet. So all these indicators sort of prove that out and show the sort of push and pull there. But you were saying last time that the used addresses was increasing at the moment that we were recording our last segment. It looks like they've dropped off a little bit in the last
yeah You captured that. Wow, I'm impressed. I don't even remember what I said last time, but yeah, that's true. It was. I was quite, looking like, oh, we're going to get a divergence, maybe convergence, maybe the whole thing will meet around 2000 or so. But it's turned down. And that's just part of the job. It's an indicator. Again, it's a lagging indicator. It's a 30-day average, but it's still what I see now is it's consistently sustaining lower levels, which means that prices are still too elevated.
Interesting. So what's this next chart that we're going to go look at?
Well, there's one thing that really got me. I want to show one chart that got me, at least I look at it from a trading standpoint too, is, now that I don't trade, I was like, oh, okay, there's a level I'd like to buy. There's a level I'd like to sell. I don't, which probably means I'm more accurate because I don't do it and don't put my, my own money into it because it just helps.
Keeps you unemotional.
Yeah, well, it's so true. So here's one of the things I think was a key indicator back, mid-December. The market was this way too down. We have one way I like to look at, you want to look at the market relative to its 50-week average, whatever average it works. It got to the lowest since the dip in 2015. I'm going to pull this up so you can see it. And at the same time, we had, well, you can't see it now, but shorts reached a record. This is the measure of shorts that I find on the web, and then I also include futures. The problem is because the government shutdown, we haven't updated futures data for a month. But even without that, so we had record shorts, market record short, and we had a little bit of a bounce. But what's happening now is you look at shorts have come way down, and that's the problem. You want a short market. For it to go up, it needs to be really short. Once those shorts come out, that's a sign that you're more likely to dip. So they've come down fast.
Can you dig more into that? Because I think what you're talking about is actually, multifaceted and has larger implications. You're talking about sentiment, you're talking about actual shorts on the market, and you sort of set it as a general rule that if you want the market to bounce upward, counterintuitively, you want there to be a lot of shorts. Just could you dig that the concept out a little bit for us?
So it's called a short covering rally. Typically, oftentimes it's like, they say sometimes it always starts with a walk in baseball. A lot of times bull markets start with typical short coverage rallies, meaning when the market's going down, everybody's getting short, people use leverage, they test it, they push it lower. And then often sometimes people get too short and boom, it goes up, right? Because they have
short
to cover.
Squeeze.
Yeah, they short squeeze. And that's what we've had. We've had a decent short squeeze, but only 33%, which is not good. And so for people looking for bottoms, you want to see it get really short. You want to see this level reach new records. And it did, and it came back, which is another bit. I want to, I'm looking for signs to say, all right, this is finally bottoming. And that's not what I want to see. So it's come off fast. Again, this is not including the full data, including futures, because that data is delayed. But that's the key thing to look for is a market that's way overdone short, really aggressively bearish, maximum loss of faith, and usually signs of a bottom. Unfortunately, means we're not there yet.
Yeah, so I guess I've had another trader who's a very avid trader on the channel as well. He's got great technical analysis sort of background, and he was saying that we have not seen capitulation sort of candles yet, and so I guess that's what you're echoing now, is that there's been no signs of capitulation. I guess over the last 6 weeks, not a lot has really shifted.
Correct. And looking for signs of capitulation, signs of the bottom be over, sign of a change, and just don't see it yet. I mean, we've only had a third rally. Obviously, Ethereum bounced almost 100% and for different issues. But again, those are signs of short covering. Now, there's one other chart I'm just bringing on right now. I haven't really published on yet. I just want to show it out what I looking at earlier versus the dollar. What you see in that orange line, that's the U.S. trade-weighted broad dollar. It's calculated weekly by the Federal Reserve, and it's probably the best broad measure of the U.S. dollar there is. It's like 22% Chinese yuan, overlaid with Bitcoin. Now, typically, Bitcoin's a currency. It's like gold. When the dollar goes down, gold goes up. Gold's basically reciprocal. I expect that to be happening at some point in Bitcoin, trading more like gold, more like the reciprocal of the dollar, which it basically is. Obviously, I believe in Bitcoin as digital gold. And what's unique is this is a trade-weighted broad dollar. It put in a 16-year high back in mid-December at the same time that Bitcoin put in a low. That's what I want to see. Signs that Bitcoin's trading and acting like reciprocal of the dollar, like gold. And so I'm looking for more of that. In the past, it didn't really matter. You put a bottom in the dollar right about when Bitcoin was peaking, but it was really, that was more the speculative frenzy. We had a peak in the dollar here and dollar dropping, which is bullish for Bitcoin. But again, that was still early days.
Yeah.
More of a decline in the dollar, and Bitcoin showing potential reciprocity, however to say that, acting more like gold, acting more like a reciprocal to the dollar is what I'm looking for in the macro this year.
Yeah, that reciprocity that you're talking about, I think that's kind of interesting that you're, it's okay, good enough for government work, as they say, right? But that reciprocity that you're saying, I think that's something that everyone is, that's certainly an underpinning of the crypto revolution, as it were. This is the ideology that essentially what's happening with the dollar is more or less unsustainable, that the debt we're carrying as a country, that the amount of quantitative easing that's taken place following the 2008 financial crisis, that now approaching a potential recession could mean, essentially a rapid devaluation of the dollar. And obviously with that, now that, Bitcoin is establishing itself, at least in the press and in the minds and hearts of the world as a potential alternative, what do you think are signs? Are you seeing any signs? Obviously, there's some weakness in the dollar. Are you seeing that equation spelled out from a quantitative standpoint, that the dollar is overextended and that we should be looking for a weaker dollar in the
Exactly.
Sorry?
You nailed it. That's what I'm looking for. That's basically what I'm expecting this year for the dollar to have peaked. And the key drivers, the two key drivers for the dollar is the U.S. stock market outperforming the world, which it has, but it's got to such extreme levels, and Fed tightening, which I think are both turning. Now, the Fed is still expecting to tighten, yet the markets are already starting to price for ease. So that's a unique shift. I'm obviously always looking at the markets, and the key driver is the U.S. stock market. So if that continues lower, which you're seeing a little bit today, we're on Tuesday the 22nd, probably more like this week, that's more likely to be the driver, which makes the link to currency, and which is a positive for commodities and for things like gold and Bitcoin. But the thing is, I see gold has been stuck in a range for 5 years. It's ready to break out, and the path of least resistance is up. During that same time, Bitcoin's gone up so much, it's still reducing those speculative excesses, and just trying to determine when that'll end and at what point this will transition.
So I guess I want to sort of piggyback again on that question. Do you feel like there's that, beyond the dollar being looking like it's prime for a reversal, for a lot of weakening over the course of the year, along with the traditional sort of general securities market, do you think that there's a potential, sort of kind of drastic devaluation that could come based on the combination of circumstances that we're looking at? What do you think is the potential, worst case scenario for a 2019 in traditional markets in the dollar? And what do you think is a more, the most, in your mind, a more likely scenario? And what do you think a sort of more, negative, the possible negatives that could happen as far as in these traditional markets? How low could we go? Is it, I've seen predictions that the Dow could take a plunge down to under 10,000 and stuff like that. Are those things that are, within your potential projections?
Well, I hope not. I like to use simple examples. I hope it doesn't get that bad, but I suspect it's supposed to continue. And me as a strategist, even if I had a feeling that'd be that word bad, I'd have to be careful anyhow, because I don't want to create fear. But I like to use a simple fact. I've been using this for over years. Just look back at what's happened in the past. Last time the VIX recovered from a similar level was 2008. We all know what happened. It actually started recovering in 2007. So things are nowhere nearly as imbalanced, which is good now, but we should expect a prolonged period of higher volatility there, which really to me is all about the dollar. And I'm showing a chart now on the dollar, and that's really where my main focus is. What you see in that orange line is expectations from the market of Fed ease. They shifted to ease, and what's really been driving it is the stock market versus the rest of the world. So I look at it as this is, let me show you a chart. This is just starting to happen. How far it's going to happen or go, I don't know. But the indications are there, and I can start out with this to just explain reason why. It's very simple, and to let our viewers make the judgment for themselves. But at least, so what you see here is just a chart of volatility of the stock market. This was the lowest ever. That's the average price from 2017. Last time we did that was 2008. And then last year, good news is we've had the biggest gain ever. It's still starting to recover. Now, that is all indications that we should have continued mean reversion there, which trickles down to other assets.
Well, thank you very much for that. A lot to unpack there, but again, a very, very savvy analysis of the traditional markets. And what I find almost most exciting about all this is there tends to be, at least I've found, a lack of desire to quite connect the dots between traditional markets, the U.S. dollar, and Bitcoin and cryptocurrency. Until really recently, there hasn't been a lot of, I guess, interplay between them. Do you feel like that growing correlations, whether inverse or direct, are a function of more, I guess, established players getting into the game, bigger entities participating in the cryptocurrency movement?
At some point, yes. The way I see it is similar. It's hard for, and we launched an index here, the Bloomberg Galaxy Crypto Index, with the intention of making beta in the space, so for broad investors to get involved. But I always look at that. I look at broad investors are more likely to probably look at Bitcoin and gold as similar and maybe invest that way rather than the broad market, which still shows it's so adolescent, so major issues, and still what is it? We have 2,100 now total cryptocurrencies, maybe only 10 that matter, but still there's so many of them and they're so early days, and I look at the markets more focused on the actual Bitcoin institutions getting involved, more on a global scale, like gold, because that's where I have to differentiate. There's Bitcoin, and there's all the other altcoins, and they need a major flush still. Yet Bitcoin is still having its flush. It's just it's a whole nother ball game, and that's why I always put two words together: that and gold and dollar and the volatility. But I think what happened. Go ahead.
Sorry, you referred to a sort of a supply, I guess a supply issue with Bitcoin with regard to the forks and the altcoins. I feel like Bitcoin Cash and Bitcoin SV have sort of shown their weakness, especially of late. Does the failure of these projects or the failure of Bitcoin forks indicate more strength in your mind for the I guess the thesis of digital gold?
It does. One thing it does for the actual case, I think, for digital gold. And I want to show you one chart as we speak on that. And it's just where I always point out this is an analyst. It does, but I don't know how they expound upon it. Because the problem is they do exist. And every time you hear about these forks, it just added supply. But some of them are in the top 10, as we see, which means they matter. And it just means more supply. So when people use that whole argument, it's limited supply, I'm like, yeah, it really isn't, because you have the forks that pop out and they're traded and they get in the top 10. And then we all know that potentially in this world, things can change. And it's not like gold supply, which is hard to find. But this is one chart I want to show. Is I use it as a simple example. Is in white, you have the number of total cryptocurrencies on CoinMarketCap. It's very simplistic, but as a strategist, I see that as supply, and I see it as parabolic, and I see that needs to at least stabilize, as it did the last time we had a decent bottom in the market. Now I know most of them aren't legit. Some of them that still exist are just trading where they should be. But the fact is, it's still increasing. In the past, when it did stop increasing, that was a big bottom in the market. So I still view that overall supply is a problem for the entire market. But then again, that's where Bitcoin's different, and that's why I'm always looking for indications that it might be bottoming. Just don't see it yet.
I appreciate that. I would obviously be a little bit remiss not to point out that, something that I feel is quite confused, and this is not necessarily the right place to make this whole argument, but essentially Bitcoin is a cryptocurrency, and that word gets applied to almost all of these projects that are listed, whereas a lot, at least a significant portion of them, are not attempting to do what Bitcoin does, which is be a digital store of value, a medium of exchange. They have, ad hoc, sort of very specific utilities that they're trying to accomplish. And, I'm personally hopeful that those individual utilities will start to become more important, and that the two stories will diverge a bit. But I agree with you, as far as diet versions of Bitcoin and other sort of just currency plays, there are too many, and it does confuse the market if it doesn't dilute the market. So I guess have we I guess sufficiently analyzed the traditional markets as they pertain to Bitcoin? Because I think that right now it's an interesting time, especially for cryptocurrency investors, just to take a step back and to analyze macro trends. What do you think is the most important macro trend that we can look forward to over the next 6 months, cryptocurrency or not?
Dollar. The trade weighted, just any measure of the U.S. dollar, if these truly are going to be currencies. Let's start with Bitcoin. If the dollar continues to weaken, and we can see divergent strength in Bitcoin, that's a key indication. For all the others, it's all more in an individual case, and we all know they still have speculative excesses that need to be reduced. I don't want to really go into which one, but to me, the dollar and what's really going to potentially drive the dollar is the U.S. stock market. So it's a unique link, but it's really just responding to what's happened in the past and how far markets have gone. So that's the key thing I like to point out is last 2017, the cryptos reached their highest ever, and at the same time, the volatility in the stock market reached the lowest in the measure we have going back 3 decades. That mean reversion process is in the process. I have questions. I don't know what's going to make it stop.
So you obviously referred to, thanks again for that. You obviously referred to, news events potentially that you can't predict. However, assuming that there would be some kind of an ETF, physically backed ETF, or physically delivered, exchange traded Bitcoin fund, would that, in your mind, create a bullish sentiment? Would that lead to, in your mind, some kind of bullish breakout? Obviously, there's been a lot of hype and a lot of supposition and predictions around that concept. Do you think that if that were to be there were to be somehow a positive response from the SEC, that could lead to an ETF fueled breakout, or do you think that is a little bit of a hopium, as they say?
I think the obvious answer is yes. I haven't been able to quantify how much it would be yet. And it depends on how they do it. Because that's one thing we have an ETF strategist, still doesn't think it's going to happen anytime soon, maybe this year. And if they do it, why should they just do it with one specific ETF provider? Because there's so many who's asked for it. So it's going to be probably a long outgoing process. And I think they're smart enough to know you just don't hit it once, at once and put an announcement. You have to lead the market into it.
Yeah.
So I don't think there'll be. It's unlikely there'll be like inside information and people get first. Someone will know before others do. The SEC will walk people into it.
Totally, I agree with that. I mean, I think that even if they announce that there's a positive or a favorable outcome, it would still be months, if not a year, before the actual ETF were to go live, or something like that. So I think it would be quite a process, regardless. But then there's also, backed, which is physically delivered Bitcoin futures. Again, I think that there is a lot of hopium around backed, but at the same time, what do you think? Is there any reason to suppose that a physically delivered futures market would even necessarily increase the spot market price of Bitcoin, or does that not necessarily translate to any increase in price?
Look at it as more of a bear's case, and that's partly from my futures background. Typically for me, futures are a hedge. And this allows people to hedge, and it's much easier to sell in futures and short than it is typically to buy. You can do that in cash easy. Well, it's virtual, I guess, in Bitcoin. And also the way I understand backed is it's ideal for merchants. Say you're getting paid in Bitcoin and you want to convert that to your dollars or fiat right away because you need to pay your bills. Backed allows you to do that. What does that mean? More likely to be sellers. In addition, this whole concept of people accumulating exchanges, it's virtually never happened. Exchanges don't accumulate anything. They just let traders trade. And that's all they want is volume. I look at it as more of it, but it helps create price discovery.
I agree with that, and I think we have seen a lot of discovery out of the the CBOE and CME futures, not in the direction that anyone wanted, but at the same time, I see a lot of sort of hopium around the idea that these physically delivered Bitcoin futures will create a demand on Bitcoin, that somehow the increased demand of the futures market needing to actually buy and trade the underlying asset will in turn create a price surge. But I never quite in my mind, I never quite put that together. I thought it was just as likely that it would create a downward pressure on the market. And so I appreciate you echoing that point. And yeah, for everyone sort of out there hoping that backed is going to put on its red cape and save us, I think that there's many things that backed is trying to do. They want to have a merchant solution, like you're saying. They want to have better custodial solutions, a second layer on Bitcoin for transacting. And then, of course, they're doing physically delivered Bitcoin futures, which is, as I understand it, the first project that they're sort of coming with. So the first iteration of backed, I don't think is going to do anything necessarily positive for the price of Bitcoin. And yeah, I appreciate you sort of diving into that. That's I guess it's a word to the wise. So I guess this is, we kind of covered it, the January update. Do you have any words of wisdom, whether about markets or cryptocurrency or just life in general, you want to leave the audience with?
Oh, well, I'll have to stick with cryptos. Not much different than what I've seen. I expect it to continue. The key thing I'm watching and worried about in cryptos is the macro. And we've had a significant, I'd say, recovery rally in the stock market already, and significant in cryptos. I expect them to continue the trend from last year. It'd be nice if they both, that was it. You just have V bottoms, but V bottoms are unlikely. So to me, that's the key thing to think about is those trends from last year, expect them to continue. And hopefully we'll have signs that they are ending. I just don't see those signs yet.
Well, I really appreciate your time and, of course, your expertise and your perspective. Everybody show Mike some love in the comments, all right? It's always good to have perspectives. And, of course, we'll try to get you back on. And as this market shows signs of bottoming and shifting, we'd love to have you back on the show to explain how you're identifying those from a quantitative standpoint. Thank you so much again.
Thanks for having me. And thanks for all the stuff you do. You educate me on at least a weekly basis. I appreciate it.
Thanks so much, Mike. Well, I hope you guys enjoyed that conversation. I know I certainly did. And a big thank you once again to Mike over at Bloomberg. We hope to have you back on FUD TV in the very near future. There you guys have it. A US dollar weakening is the biggest thing we can look forward to for a bullish sentiment in cryptocurrency and Bitcoin in specific. Will it happen in 2019? Will it happen soon thereafter? Who knows? But it seems as though the dollar is reaching an all-time high, is reaching a pullback point, and he believes that it will happen over the course of the coming months, if not year plus. We have to sit tight and see what happens there. We know that the ETF is no longer a thing, but maybe we will see a weakening US dollar that will lead to a bullish sentiment in the cryptocurrency markets. We'll just have to see what happens. Anyway, if you guys enjoyed this episode, make sure to smash that like button and leave us a comment in the comment section below. Let us know what you thought about our conversation here. And of course, we hope to have Mike back in the very near future. If you're not already subscribed to FUD TV, I encourage you to hit that sub button and click that little bell notification. That way you're made aware whenever we put out new content. I'm Elio Trades, you're watching FUD TV, and I will see you very soon on the next episode.